Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So it's great to be an Uber investor over the last 12 or 13 months here since we bottomed out at the end of 2022. Had a great year, Landon. They're profitable now. Ridership has gone up. The number of members, I believe, is over 140 million and continues to expand. The question is your data supportive of this kind of rally to all-time highs recently?
Yeah, I tell you what, I mean, when we talk about Uber, it's always Uber and Lyft. And, you know, now more than ever, it's almost like apples and oranges at this point. I mean, Uber has just completely left Lyft in the dust. And you can see it in the stock prices. I mean, we would definitely agree with the market as far as, you know, where these two companies are headed. Lyft at, you know, multi-year lows, I believe, and Uber at all-time highs yesterday, and just a little bit off those all-time highs today. But incredible run here. I mean, when you cross over that profitable barrier, that's a huge mark for investors. And I can tell you that the difference between the companies is pretty stark as far as our data goes. When you look at you know, I'll start with the lighter version. The consumer happiness is fairly comparable. I think Lyft is maybe 3 points behind Uber, 52 versus 55. So not huge there. But then when you look at, you know, web data, for example, which includes like confirmations and things like that. So it's a pretty decent measure of traffic. And no pun intended on traffic there. But you look at Uber at plus 6% and Lyft at negative 22. It's really drastic between these two, because really this should be the same company, right? They started basically with the same mission, but Lyft is still a taxi app basically, and while Uber has focused on becoming that last mile logistics company. They're moving people, yes, but they're also moving food, they're moving groceries, they're moving liquor, they're doing a lot of things that just, you know, help. You know, they're basically a convenience company, and they're changing the way that they operate. So very bullish as far as that, you know, the management of Uber versus Lyft. And I can also tell you there's room for upside. I mean, there's two ways to look at this day. When you bring up the, you know, the food delivery, DoorDash is by far the dominant player here. Uber Eats is a very small slice of the pie, but there is upside here. So they're doing really well when it comes to ride sharing, but they could, you know, start attacking here. That's kind of the optimist outlook. The pessimist outlook is saying, well, they're getting killed. You know, this is a 9 or 10 to 1 ratio between second place and first place. So that, you know, DoorDash is doing really, really well when it comes to, you know, the mind share out there on social media. But they're doing other things besides food delivery. They're also doing grocery delivery. They added 400 locations with their partnership with Sprouts Farmers Market. You know, they bought and then basically rolled out Drizzly, which is an alcohol delivery service. They bought them, they shut them down, and now they're using that infrastructure to deliver alcohol as well. So you know, they have a good vision, and of course, you know, we always talk about one day they won't have to pay their drivers, and then they'll be profitable. But now they're profitable, and so I think there's a lot more optimism around this company, and it does show in our data. So I would say that we do support these very high levels of Uber. We're not maybe we're not buyers here, but we're buyers on dips, and we prefer to invest in Uber over Lyft for sure, just based on the trajectory of the company and the vision coming from the top.
Yeah, I totally agree with much of what you were talking about there, Landon, and the data certainly supports it. One has to think this is probably a highly cyclical company. Can't think of anything more discretionary than getting that food delivered that you could just go or go to the grocery yourself. But that's not really where my question goes. My question goes is, how do you see this space shaping up? What you described and what I heard was a company in Uber that is kind of this do everything when it comes to moving things. And then they got competitors in Instacart doing groceries. They got competitors in DoorDash doing food delivery. They got Lyft, of course, in sort of just general human mobility. Do the other players need to form some sort of alliance, partnership, potential merger to then take on Uber? And does that even make sense? Because I'm seeing a company in DoorDash that's doing well, and winning in their space, at least according to your mentions. And then I'm seeing a company in Lyft that's all but been knocked out by Uber. They're just toying with them because they don't want to have antitrust concerns. Where does the leverage come from, and does it even make sense for companies like that to partner up?
You know, I think if I was on the board of those companies, I'd say do what you do and dominate what you're doing, right? I wouldn't start talking about partnerships. But if I'm advising Uber, I say, yeah, take it all. Like go do everything, because that's what they've shown that they're good at, is the last mile logistics. And yeah, I think there is some, there's some elastic demand, some seasonality as it comes to consumer purchasing power. But if they become the go-to for people, where you open up that app and now instead of associating it with getting myself from point A to point B, it's getting things to me, whatever that may be. If you can start associating that, they will start to chip away at some of these competitors. So we're going to watch DoorDash, we're going to watch Instacart, and we're going to see if Uber starts to take a piece of those pies. But so far, it's been very, very dominant, at least on the food delivery space with DoorDash. It's unbelievable how much dominance they have there versus a few years ago when there was basically 5 companies neck and neck for first. They just took off. But I want to watch and see how they do with this Sprouts Farmers Market partnership, if they take anything away from Instacart there. But I think that the focus for Uber absolutely needs to be on all of that last mile logistics and becoming a one-stop shop when it comes to clicking on that app for getting things delivered to you as well as you delivered places.
Yeah, and there was a note out today. Wolf Research upgraded Instacart today and said that Uber should buy them up to $40 a share, and saying that it's going to be accretive immediately, and maybe dig into some of DoorDash's market share there as far as grocery delivery. They said it's $1 trillion market as far as grocery delivery. But Landon, I wanted to hit on the mentions chart that you have. It's got the stock far above maybe your mentions count as far as your data goes, which is still up 27% year over year. Is that the warning signal that's saying, hey, maybe we wait here and we'd buy pullbacks?
Well, I like to kind of look at these lines. I get the, comparing them, but I do like to look at them separately. And you see in that blue line, the darker blue line, that's the mentions, the 90-day moving average, people talking about Uber and using it. And it's very strong. And to Alex's point, yeah, there's some cyclicality there, but it is still very strong, up 27% on a year-over-year basis. The stock obviously outperforming that by far, running up into all-time highs yesterday, like I said. And so that's where I'm saying, I'd buy here on dips. I don't, this is not a company that's accelerating extremely quickly to the upside. I am a believer in buy high and sell higher. But for this kind of growth, this is not like, hockey stick type VC startup pitch deck type growth. This is just solid growth. I'm more of a buyer on dips here. I think, give me some value at 55 and I'm strongly considering it. And I'm willing to maybe miss the run from 65 to 70 because of that. So that's kind of where I'm at here, is that the mentions look good. Everything that we've got looks strong on this company. And if it was priced lower than it is now, I'd be a buyer. But this is, this is fairly priced, maybe slightly overpriced, but it's not, I'm not hitting the sell button.
Near all-time highs. Not surprising. I mean, I think that's a good strategy. But as you mentioned, me being a trader back in my day, you miss those buy high and sell higher because typically you get out. All right, great data, great information as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data for us on Uber. Pretty positive. Stock just off all-time highs.